Hi guys, this is Chauke. I hope you guys are okay. In this morning lesson, we're going to do accounting equation. This is my last revision with you guys for grade 10. I hope that as you watch this, you will understand the accounting equation much more better. Now, it is standard procedure for our accounting equation to always start with concepts. Okay, so you need to make sure that you are familiar with all the gap principles that are in relation to accounting equation. So the first question here, we have to match column A with column B. So here they're saying choose a term from column B that matches the description in column A. So I'm going to look at the description in column A and look at the concept that it goes with in column B. Okay, and then I'm going to write the answers in my answer book. So here the first one, they're saying that financial statements are drawn up on the assumption that the business will continue to trade in the foreseeable future. Once I see keywords like foreseeable future, I think about going concern, and according to here, going concern is number F. So the relevant letter for this will be letter number F. Okay, and then the next statement says income and expenses must be recorded in the correct accounting period, regardless of whether it's been paid or received. And we know that this is matching, and matching is concept number E. So we're going to write number E here. And then the next one says information that is important and that will influence the decision making must be shown separately in the financial statement. Remember, this principle is in relation with materiality, which is letter number D in this case. Next one, it says that fixed assets purchased are recorded in the financial statements at original cost. So this will be historical cost, and according to this, historical cost is letter number A. So we would have A here. Next, money lost due to theft of stock is written off even though there is a possibility that it may be recovered in the future. This will be prudence, and prudence according to this is letter number C. So in so doing, you will be done with the first 5 marks of your question 1. Okay, and then the next question is accounting equation. Here they're saying the transactions appeared in the books of Libra stores. The business uses a gross profit markup of 50% on cost. Now, this information to us, it means that our cost price is equals to 100, and then obviously our profit according to this will be equals to 50%, and then our selling price will be equals to 100 plus 50, which means that will be selling out of 150. So very important when you deal with transactions that have got to do with cost of sales or sales, you will need this information in order for you to be able to do the calculations correctly. And here they're saying analyze the following transactions according to the headings provided in the answer book, and it's for 25 marks. And remember guys, to pass each paper you need at least 45 above. Okay, so we are going to go to the transactions. If you look at your answer book, you'll realize that they've given you an example that happens when drawings are done, but for now we are not going to look at that example. I'm going to go straight to our questions. The first transaction says that Libra stores paid. So number 1, what we have done, we have paid. Very important for you to identify the account that is in relation to when we pay in a transaction. And then they are saying that we paid 3,000 to a creditor. So remember, the second account here will be creditors control. Once they say paid, we need to identify the account, and the account that is in relation to paying something, it is our bank. So in other words, what is happening to our bank? It is declining. So obviously if our bank is declining, it means that our assets are going down. Okay, and then the next one, the next part here is creditors control. So the second account is creditors control. So we need to check what is happening with our creditors control. What is happening to it? We are paying, and our creditors control, it is decreasing. Remember, you had bought something on credit in the past, your liabilities increased, so now you are paying, so which means your liabilities are going down. And you will also have to remember the principle called debt click. So for debt, would have debit, would have expenses, would have assets, and then would also have drawings. There's no way you can do accounting equation without this principle. So remember, for debit, it means that these are the things that are increasing on the debit side, okay? And then for click, it means credit. So these things that I'm going to write are increasing on the credit side. So number one, we would have our liabilities, and then secondly, would have our incomes, and then would also have our capital. Very important that you list this. Okay, so now when we list a transaction, we have to come back to this principle and check which accounts are affected. Okay, so when we show the effects of the first transaction, we know that bank as an asset, okay, we know that bank as an asset, it increases on the debit side. So but because here we are paying, it means it is reduced. So obviously if it increases on the debit side, it will be reduced on the credit side. So our account debited here will be creditors control. Remember, you are paying. So on the first transaction, account debited, it will be creditors control. Okay, let me maybe write in small letters. So it will be creditors control. Okay, and then our account credited will be bank. So we'd have bank as the account credited. But remember what is happening here. You are paying, guys, and then your money is decreasing. So it means the sign here will have to be a minus. And then remember, the second account, which is creditors control, it's a liability account. So it means that owner's equity is not affected and our liabilities are declining because we are now paying. Okay, and then we go to the second transaction. Here they're saying issued a credit note to a debtor for merchandise returned. Okay, so now number one, it means when we identify the account, we would have number one, debtors control will be affected, right? We'd have debtors control. Okay, and then we would also have the second account that we are going to have is debtors allowance, because a debtor is bringing back goods. Okay, and then next we would also have trading stock, and then also the second account that we have is cost of sales with regards to the cost price. So you must identify the account always. Now let's think about it. A debtor is bringing back goods. Now remember, debtors control is an asset. So if I bring back goods, it means your debtors will decrease. So account credited in this case will be debtors control. So we'll credit debtors control. Remember, we are now dealing with the amount only, the account only. Second account is debtors allowance. Debtors allowance will reduce, is recorded on the debit side. If you look at your trial balance, so we have debtors allowance here. Now remember, this data is bringing back trading stock, so which means our trading stock is increasing. So we have your trading stock on the credit side, and then trading stock, remember, goes in hand with cost of sales. So the contra account will be cost of sales. Okay, let's start with the ones that have got the selling price. So now remember, they gave us the cost price here. So with the cost price, I'm bringing back stock. So the amount for here will be 700. The amount for the cost price amount will be 700. It has already been given to us. Now I need to explain what is happening to my assets. My assets are increasing by that 700, but remember, cost of sales decreased my owner's equity when I was selling. So now, because a customer is bringing back goods, it will increase. So it will increase my owner's equity. So it will be a plus in owner's equity and nothing in liabilities. Okay, and then from there we have to use the markup to get the selling price. So you are going to say, I'm going to put the calculator here. You are going to say 150 divide by 100 multiply by 700. It is going to give you 1050. So that 1050 will come here as the selling price, 1050. Now remember, debtors allowance, guys, it is owner's equity account. In this case, it is decreasing my profit. Okay, and what happens to, remember, we are saying debit debtors allowance, credit debtors control. So it will be a minus to my owner's equity, and also a minus to my assets, because my debtors are also decreasing. So it will be a minus minus. Okay, and then that transaction says we have received an invoice for trading stock purchased from a supplier for 21,500 less 97% trade discount. So if you say 100 minus 97, you are left, I mean, if you say 100 minus 7%, you'll be left with 93,000. So if you say 21,500 multiply by 0.93 is going to give you 19,995. So it means that on our invoice we're going to record 19,995. So now we check, we are purchasing stock. When we purchase stock, our stock is increasing, and also here our liabilities will also increase because we bought on credit. Remember, you get an invoice because you bought on credit. So our account debited is going to be trading stock, and then our account credited is going to be creditors control, and then our amount is going to be 19,995, and then our assets are increasing because we bought trading stock. Owner's equity is not affected, and our liabilities are increasing because we bought something on credit. Okay, then you are done with this transaction. The last one, they're saying that a debtor whose account was overdue. Remember, if the account is overdue, it means this person is owing us, and they're saying that this debtor was charged with an interest of 25 rand. So it means that his debt will have to increase. So account debited will be debtors control. Okay, so we have debtors control, and then our account credited is going to be interest on overdue debtors. So now so which means that the amount that they gave us is 25 rand. So we need to explain what is happening. So our debtors control will be increased by 25 rand, and then also our interest on overdue will increase our equity because it's an income by 25 rand. So it will be a plus here, and then on the last column it will have no effect, so 0. And this is how, guys, you would score your 30 marks whenever you are given that accounting equation. Remember, for the first part we answered on the answer sheet, so here are the answers. So guys, if you want me to tutor you personally and help you prepare for your Monday's exam, you are more than welcome to ensure that you get in touch with me by using the details that are available in the description of this video. Thank you so much for watching. God bless you. Shalom.